So we need to talk about some of this S&P 500 flow from last week. Look at these orders here, $3.6 million out the money call for this week's expiration. This is highly unusual. That's why it's highlighted in blue. This was 16,000 contracts, so quite a bit there. It also was opening because a volume was over the open interest. Then we also had this $2.4 million call order for the 555 strike. That's also out the money, and the 920 expiration. So these are pretty unusual prints to the bull side, which is very interesting because of what we saw last week with these three aggressive down days. We had Wednesday, Thursday, and Friday all aggressive to the downside, quite a bit of a sell-off in a very quick amount of time. And this is contrary to that current sentiment in the market of that pullback and that uncertainty because these people were adding longs and they were making a bold statement when they did so. And that brings me back to the chart over here because there's something they might be seeing. In this case, there was a previous range on the S&P 500, and basically the range that I'm looking at, and I'll show you here, I'll just draw it out, is around these levels over here. You could make the argument that this was a previous supply zone up here, but roughly between both of these levels is where we saw a previous resistance as well as a previous support from around down here. So up here, every time we retested it in this range, it rejected, and then every time we retested the lower end around 542, it acted as a support. And the reason this is important is because we finally were able to break out above on July 2nd, and this is the first time we've retested that range since. So despite the fact that we had this aggressive downside move, it's interesting to me that these calls were hitting the tape as we retested the top of this previous range. As of now, technically speaking, this is a retest of a previous breakout. If this is able to hold, this can actually send it a lot higher, likely all the way back to around 560. I know that may sound crazy there, but if we see this range over here hold, like I said, there's a lot more upside on the table. So that one is a possible trade setup for the long side. Again, contrary to the popular sentiment right now, since apparently everybody's a bear all of a sudden. But that's the first point that I wanted to make. There is a long setup over here with risk back under around 547-ish. But then two, this also brings an important conversation to the flow aspect that we saw last week. These are prints that you're going to want to follow going into this week. Just monitor them. You don't even have to take a trade setup similar to the ones that they took. Just follow what these whales are doing in a sense. See what they decide to do, if they cut that position or not. So reference them throughout the week, because if these stay open, typically when you see orders like this, like a $3.6 million out the money call that expires at the end of this week, is very aggressive. These types of prints, at least historically, if you follow the Twitter account, you can see they post a lot of these whenever they hit. Although they are rare, these tend to have success, quite a bit of success as well whenever they do hit the tape. So this is something that I'm going to be watching this week. Again, no surprise that they added on this retest of the previous range. And as long as this holds, I see a bounce that is due. If it's unable to hold this around 547-ish level, then yeah, of course, we can see some more downside, probably to around where the lower end of the previous range was, to around 542. But at the moment, I see this as a bullish retest of a previous range. So call me crazy if you want to. I know that the sentiment, at least on apps like Twitter or X, whatever you want to call it, seemed to be very bearish all of a sudden, even though it was only 3 days of sell pressure into an OPEX of all things. But that's where I stand right now, and it is nice to see this complementary flow that seems to be consistent with that thesis. Another thing I want to mention is the VIX, because we did see quite a bit of upside last week, and there also was some corresponding flow with that as well. So if you remember, in the previous video we didn't do one last week, but there was one from the previous Sunday. I mentioned you do want to be mindful of this downtrend over here. I wasn't sure when we would have that break, but I expected as we head closer to August, there would be a breakout. And those are the exact words that I said in that video. And of course, soon after, we did have this breakout over here. So Monday of last week, we had the breakout move of this downtrend, and then a lot more upside after. So again, technical analysis on the VIX maybe isn't as consistent as an individual ticker, as I mentioned in that previous video as well. But still, in this case, this was a clean downtrend breakout that had a lot of upside afterwards. So it did work out regardless of what you think about technical analysis on the VIX. We did have a breakout of a downtrend here. So in this case, we did go all the way up, closed at 16.5. So highest close since when? All the way back around, all the way back around April, end of April of 2024. So this was an unusual close. And And personally, just based on what we saw last week, it seems like this was the market pricing in a couple factors. One of those factors, of course, Biden did drop out of the race. Seems like the market already knew that was the case, and that's why we saw this form of hedging going into the weekend for that news. The market doesn't like uncertainty, so in this case here, there was a lot of hedging, but to a degree that could be the market overpricing Biden dropping out of the race. We'll know soon if that's the case, like as soon as Monday or Tuesday of this week. But then also there was OPEX that week, which typically sees some type of uptick in volatility as well. So a couple factors there that could have led to this, plus the fact we had this breakout technical wise, and that's why we saw 16.5 going into the weekend. But like I said, there is the possibility that this was the market overpricing in the news that we had this weekend. I actually believe that's the case. That's why I'm consistent with that thesis on the S&P 500 finding a bottom around this range here for this previous range retest. So that supports that thesis as well. But again, we're going to find out very soon, Monday or Tuesday, if I'm correct or not here, because we need to stay above this, ideally 548.50-ish level. And then VIX needs to start coming back down, starting to calm down really, since it had that large uptick last week. So a couple factors that I'm watching for this week, both technical wise as well as just based on the flows that we saw, because these are substantial prints. These are definitely ones you're going to want to continue to watch. Like I said earlier in the video, if we see more like this, then that can certainly be a sign that bulls are starting to make a stand around here and they've had enough of this sell-off so far. So that's my thoughts on this S&P 500 going into this week. I'll make a couple comments on QQQ as well, because this is something else I do want to talk about, QQQ to IWM, because we've seen abrupt change in the current leader of the market. That was NASDAQ, of course, before, but now it seems to be that IWM, the Russell Index, has experienced the most relative strength lately. So QQQ is down here. What's critical about where we are here on QQQ, kind of similar to the S&P 500, is it's around a key support level. So down here, of course, was a key support. We had a sell-off day on June 24th, and then had a gap up the following day and just continued a lot higher soon after. So it did find support Friday on that same level. But why that's critical is because if we break below this, it's going to be an instant gap fill, or almost instant gap fill, to around this 468-ish level. There's a lot of room around here. There's a big opening, not only this gap, but also we just haven't traded around this level other than this day over here, and it was a very clean upside day. So we haven't really traded much around this range here. So if it does break below that 473 level, there is quite a bit of downside, like all the way back down to fill that gap before we even see a sign of a bid. So that's why it is very critical that around this level holds, very similar to the S&P 500 holding the top end of the previous range, as I shared earlier in this video. So this is another area that I am watching for this week. And of course, like I said, when I started talking about QQQ here, we have a lot of relative strength in IWM ever since it broke out of this thick supply zone. So I was looking at this 209-ish, 210-ish level, because if we did break above that level at any point, there would be no reason to expect another rejection from the supply zone as we had seen previous times before, like over here, here, and here. So that's why I said stop over here. There's no reason to short if we had a daily close above. And of course, we had a daily close above here on July 11th. Once it closed above, it never looked back. It just had continuous upside. So what's interesting here for me is if QQQ starts to bid, there is potential that this, in terms of Russell, small caps start to pull back at the same time. Not necessarily, it doesn't necessarily have to be the case that happens, but we've seen some type of a minor inverse correlation to a degree here. So if that's the case and QQQ does catch a bid this week on that level I just showed you, then IWM could retest this previous range around 212, 211, maybe even 210 at the lowest end. If that's the case, I'm interested in longs on a retest, because very similar to what I showed you on SPY, a retest of a breakout. It'd be the same exact thing here. We broke out of a previous supply zone, so now it will act as a demand zone if we do retest it. If that's the case, I'm going to watch the flow, see if bulls are in agreement, kind of like they are with S&P 500 right now. If that's the case, plus we have a retest of around, like I said, 212, 211-ish, then I'm interested in longs, and as long as it can stay above that 210-ish level, then longs are good to go for continuation. And really what I'd be looking for is something to the degree of this, where we have downside to around here. It kind of consolidates if it wants to, or just instant bounce from there, and then upside after starts a new uptrend. So something to look for. This one's more future oriented, so not as current as the S&P 500 trade that I'm looking at right now, but You always want to prepare for the future in the market, always plan ahead. That's one of your greatest assets as a trader, being prepared for whatever comes your way. So this is just something I wanted to share in today's video as well. Regardless, as always, appreciate you guys watching this video, and I will see you next time.